As US home prices continue to surge, many are asking, are we in the middle of a housing bubble? And depending on who you're talking to, you'll hear all sorts of answers. Yes, we are. No, we're not. But one thing that is for sure is that right now, what we're experiencing in the housing market is not sustainable. It's certainly not sustainable. And there are incredibly wealthy people taking advantage of the situation and pricing ordinary Americans out of the market. Now, new data from Redfin shows that the median home price in April rose 20% to $347,500 compared with just a year ago. And the average home spent just 20 days on the market before selling. If you're in the market to buy a home, you've probably experienced bidding wars. You've probably even offered above asking price and still got outbid. Now, when you hear the reasons for why this is happening in the housing market, much of the examples you get have to do with the coronavirus pandemic. Low mortgage rates, that's one of the other things that you'll hear, which is true. It means that the cost of borrowing it costs less to do so. It's easier to qualify for a bigger loan for a house. So some are arguing that the low mortgage rates are convincing people to take out loans and buy homes. There's a lack of homes available. So since the lack of inventory is an issue, that drives up the price because of the high demand. Then there is also teleworking as a result of the pandemic. More and more people are looking to buy homes for more space so they can work from home. And then there's also a delay in new home construction as a result of the pandemic. But that is not the full robust picture. And I think it's important to talk about why we're seeing what we're seeing in the housing market. And just to give you a sense of where we were at prior to the pandemic, home prices rose 12% year over year in February, the fastest rate since 1996, and that's according to the most recent reading from the closely watched S&P CoreLogic Case-Shiller Home Price Index. So Cenk, before I actually tell people what's really going on, why don't you jump in?
I was mainly mumbling, although probably bumbling as well, under my breath, going, preach it, teach it. Okay, so look, good news, bad news. Good news, my parents are selling their home soon. Okay, so I thought, oh, marketing housing bubble where they get more. Good, okay, so if you're selling a home, you're feeling pretty good about it, right? But as the local news guys like to do in their intonation, my parents will be selling their home, but they'll also be buying a home. So that means, well, that's good news, but then that's bad news. So look, all the things that Anna outlined in terms of where the market is, well, people want to buy more homes because they don't want to be packed in the cities, and they haven't done a lot of construction because of coronavirus, and there's a lot of demand and not a lot of supply. That's all very normal. Okay, so that's a normal demand and supply, and if that's why the market is moving up and there's nothing else, then that makes sense, and it's just a normal story. But there's more. Hence, we go back to teach it.
So this is what frustrates me about the conversations revolving around the housing market and the lack of affordable housing. And clearly what we're talking about here is different from renting, although this has an impact on renting as well, which we'll get to in just a second. But to simply say that this is a problem due to a lack of construction doesn't give you a full picture of what's going on. Because if you live in a city, chances are you've noticed quite a bit of construction. The only problem is construction for new housing typically immediately gets sold to private equity firms like Blackstone, which have no interest in flipping houses. They don't even do that, which that kind of speculative nonsense also unfortunately puts home buyers at a disadvantage. But what they do is they invest in entire neighborhoods of newly built homes, single family residential homes, and then they put those homes back on the market as rentals and essentially serve as the country's largest slumlords. That's one of the issues. The other issue that you're likely to come across is a home has been sold in your neighborhood and there's no one living in it, and it's because the person who bought that home doesn't even live in the United States. We're talking about foreign investors, in some cases even foreign private equity firms who who are looking for a place to store their money, and they see US real estate as a safe haven. And there should be laws preventing that from happening when we keep hearing from our politicians over and over again that there's a lack of supply. Well, if there's a lack of supply for Americans, then why are we allowing foreign investors who have no interest in even living here to invest in US real estate? The other thing I wanted to bring up is a counter to the talking point that I hear from the naysayers, the individuals who claim that we are not currently in any type of real estate bubble because Dodd-Frank, the legislation that passed during the Obama administration, regulated the banking industry to ensure that they would not engage in the predatory lending that led to the 2008 economic collapse. Now, when it comes to big banks, Dodd-Frank certainly applies, which is why big banks have tightened up their mortgage standards. It's much more difficult to get qualified for a mortgage, pre-qualified and what have you. However, Dodd-Frank did not apply to what's referred to as non-bank lenders. And beginning in 2016, non-bank lenders ended up lending about 50% of the outstanding mortgages. And that's relevant because, again, non-bank lenders do not have to abide by the same regulations that the big banks do. And that's a problem because they are over-leveraged themselves, and they also engage in what's known as mortgage-backed securities, and those securities get traded in the stock market. And then what happens if those toxic mortgages end up defaulting? Well, then if you're invested in your 401k or your retirement account with these mortgage-backed securities and the economy collapses, well, then you're gonna be hurt as well. Just a few graphics, Cenk, just to kind of really understand what this is. Non-bank lenders are more likely to lend money to borrowers who might be rejected by traditional banks. For example, a borrower with a low credit score or someone hoping to purchase a home that will require a lot of renovation is more likely to be approved by a non-bank lender. Non-bank lenders can't take funds from customer deposits because they're not banks, remember? So to make the mortgage loans, as they don't offer checkings or savings accounts, instead they borrow the money on a line of credit and sell mortgages to investors. According to the Brookings Institution, the danger is that non-bank lenders depend on short-term credit to finance their loans. Markets usually tighten in times of financial crisis. Now, as we all know, coronavirus has brought forth a giant financial crisis for tens of millions of Americans, but thanks to the federal government issuing a moratorium on evictions and foreclosures, people haven't been pushed out of their homes. The question is, what happens when that moratorium is lifted? And no one has really answered that question, including the federal government.
Okay, so Professor Kasper handled most of the material here. I'm just a TA, okay? So let me add some color to this. So first off, on the private equity part, this is left out of most of the articles written about the housing market. They usually cover the first part of what we told you and then leave out the parts that affect the financial industry and might be driving a big part of this movement. So I just want you to understand supply and demand. So before we talked about the normal market forces, but when the big guys on Wall Street buy a whole heap of homes, which they have, and if you remember from a previous show, we told you that after the 2008 crash, they swooped in because they foreclosed on those homes. And so they knew they were getting them at really cheap rates. They knew the market would go back up. And the kicker is they knew that you wouldn't have the money anymore for the down payment to buy those homes back. Hence, you would have to rent from them. So they would make money on the rent and they would get the equity of the house that normally you would get. So, I mean, give them credit in a sense. That's a savvy financial move. It's done because, of course, the government financed it. They would give them giant subsidies and bailouts, etc. I could be savvy too if the government just handed me all that money and told me to go take your houses, right? So, but there's a second problem with that, which is happening now, which is because they bought so many homes, there is higher demand for that in the housing market, which drives up prices. Because you're now not just competing with Bob and Sally who also want to move into the neighborhood, you're competing with Wall Street who's buying those homes, right? But it also creates lower supply. Since they're renting out the homes, well, then they're not selling them. So all those homes that are being rented out by Wall Street now taken off the market. Well, when you have lower supply and higher demand, the prices are gonna skyrocket up. And that's exactly what's happening here. And then when you combine that with the coronavirus actual market forces, you're getting monster prices.
Yes.
And so that makes your chance of being able to buy a home and build that equity so that you don't have to rent the rest of your life, and you could actually have something that creates wealth for your family. Well, those chances are diminished and nearly gone now.
Exactly, and so what also ends up happening, and I can't emphasize how damaging this is, when you have these private equity firms like Blackstone taking all of these single family homes and turning them into rentals, you have this massive corporation serving as the landlord. And there have been many complaints on how they basically take care of these properties, how they treat their own tenants. During the coronavirus pandemic, even with the federal government implementing a moratorium on evictions, they don't care. They've been evicting tenants left and right. And so it's obviously incredibly negative for renters, but it's terrible for people who are just ordinary Americans looking to live the American dream, looking to build their wealth. And to be honest, owning a home or buying a home was really the only way left for ordinary Americans to build wealth. And Wall Street has taken those opportunities away. And the federal government isn't even having a conversation about what to do to prevent this from happening. And again, it is true that there needs to be construction of new housing because there's a lack of inventory. However, we can't put the cart ahead of the horse. We need to ensure that there's regulation to prevent private equity firms from snatching up all of the new construction and turning them into rentals. One other thing I wanted to mention is that if you do find yourself lucky or fortunate enough to be able to outbid a private equity firm or an all-cash buyer, usually those all-cash buyers are part of Wall Street, well, what you've had to do in order to get that offer approved is incredibly risky. As the Hill reports, offers well above asking price are commonplace, and those unable to outbid competitors have upped the ante by waiving inspection requirements and restructuring offers with better immediate incentives for sellers. So that's not a good sign. That means that people are willing to do away with contingencies, which ensure that the home goes through the proper inspection. They might find that the home has major foundational problems, and they've just paid $100,000, $200,000 over asking price in some of these bigger markets.
Yeah, so I want to give the last word to our members because we do the show together with you guys. So Spice Boy Wannabe explained they're buying a house, they're selling a house, and the market is super hot. And so you guys are seeing it in your own lives. In fact, they said that before they even listed their house, already realtors had reached out to them. I don't know how they found out and started talking about getting them good offers, right? So it is, and look, so if you're a homeowner, and this happens in gentrification too, there is that silver lining, which is that you're gonna get a much better price if you sell now. Where you're gonna move, that's a different question because you also have to buy, in which case you're gonna get screwed. But remember, there are two different problems here. One is the housing prices and getting priced out of the market. But the second price is the bubble. The second problem is the bubble and the crash that might come with it. So Anxiety Dragon wrote in, strange how we keep repeating the same things that caused the crash of 08. Repetition while expecting different results is the definition of insanity. Unfortunately, we live in insane times. So guys, the key there is what we're gonna look out for going forward is, are the banks doing the same things they did in 2008? So as I've explained 1,000 times on the show, the housing bubble was the trigger, but the gun was the derivatives. Those are the bets that they make on those homes, package of homes, right? And the package of homes might be worth a ton of money, but then they would bet 10 or 100 times that amount of money, and the bets are what triggered the domino effect for the crash. So have they started to redo those bets, the derivatives, the CDOs, and all those different packages? And the second problem was doing things that are off book. Because the banks would report, oh, no, we're not over leveraged. We're doing 4-to-1, 8-to-1, 6-to-1, whatever it was. Meanwhile, off the books, they were doing 100-to-1 leverage. So if you bet $1 and you lose $1, it's not that big a deal. But if you bet $1, it turns into a $100 loss, dominoes, and the whole world is screwed, right? And so if they rebuild that casino or have already rebuilt it, then uh-oh.
Yes, the correct answer or the correct question to ask, and I wish we could find a way to get the answer, is are these private equity firms over leveraged? Because really all it would take is any type of financial obstacle, economic obstacle for ordinary Americans that are renting their properties for them to default on their own loans. You get what I'm saying?
Yep.
And we don't know the answer to that yet. But what we do know is that what we're experiencing in the housing market is not in any way sustainable and is causing a lot of pain and suffering for ordinary Americans who have done everything right. And they just cannot outbid private equity firms who end up being all cash buyers.
Yeah, and those non-bank lenders could be the first dominoes to go. So be careful and pay attention to what Anna said about those guys, because they're in a much more precarious spot. If the crisis begins, they're the first dominoes to fall. And then when giant financial institutions cannot pay each other, that's what creates the dominoes, crashes the market, and then crashes the economy and screws us all. Thanks for watching The Young Turks, really appreciate it. Another way to show support is through YouTube memberships. You'll get to interact with us more. There's live chat emojis, badges. You've got emojis of me, Anna, John, JR, so those are super fun. But you also get playback of our exclusive member-only shows and specials right after they air. So all of that, all you gotta do is click that join button right underneath the video. Thank you.